February was a wild ride that had no shortage of ups and downs in the portfolio. And although it was a game of runs, I found myself ironically flat overall for the month. In this video, I'll elaborate on how I handle the extreme market volatility that we've experienced lately. And of course, we'll also cover the portfolio's value by holding, all new transactions, the dividends received, this was a battle this month, a HODL Factory update, and an update for the new fund that I run, the Snowball, which aims to compete with SCHD, and any changes to our future strategy. If you're new to the channel, welcome. My name's JFT&x, and here we aim to grow your wealth with simple, time-tested solutions. Please smack that like button with a spinning back fist, subscribe if you haven't already, and drop me a comment down below with anything that comes to mind. This video is being brought to you by my Seeking Alpha Premium and my Snowball Analytics links below. Check them out if you want to try either one for free. You'll see a lot of them in this video because I use and love both of them. You know what time it is. Let's grow. Market volatility and all-time highs. I've been asked by quite a few people to share my thoughts about the state of the market lately. This is a common question that I get in all markets, but the volume ramps up when things are looking dicey, which I completely understand. My answer always remains the same. I don't think anything of a wild market downturn. And I don't say this to be Mr. Cool Guy, but the short-term market fluctuations just don't move the care needle for me. There are a couple core reasons of why I feel that way. The first being that I stick to my target allocations in all markets. When tech crashes, I buy more VGT. Or when tech is soaring and value is struggling, I load up on my value ETF, SCHD. It took a while to fully comprehend the logic of this, but you basically do the opposite of what human emotions have people do when they ultimately buy high and sell low. It is impossible not to buy the comparative dip in any market when I stick to my target allocations. Step back for a minute and just think about the logic of the core principle. All-time highs are always around the corner. And don't get me wrong, things can get ugly for multiple years at a time. But all-time highs are inevitable. They always occur no matter what. They never stop. Moving forward with that logic, and of course assuming good low-cost quality ETFs, if you never sell your shares, then you will never lose money over the long haul. Keep on buying no matter what in all conditions, especially when things are beat up, and you'll continue to accumulate more and more shares that will ultimately hit all-time highs eventually. Unrealized losses don't mean anything to the bottom line. My message is to stay the course in all markets. Don't abandon your well-thought-out plan when hard times come. You will erase years and sometimes even decades of quality progress with a few knee-jerk decisions when times get tough. Don't sell low, don't listen to the masses, don't read the news. Stay the course and keep accumulating shares. All right, let's get into this thing. Portfolio overview. All the spreadsheets that you see in these videos are out there and available for free if you want to save a copy and make it your own. The link is in the description below. Let's get right into my accounts, and then we'll bust out the spreadsheet that brings everything together. We're going to start out here on E-Trade, as we usually do, and this is where the majority of our investments live. So I'm actually going to, for the first time on these videos, dive into each account. Normally I'm too lazy to block out the account numbers, but we're gonna do a deeper dive today. So I'm where I usually am with the all brokerage and bank accounts here. So this is everything. We're just gonna start here at the high level. You can see with SCHD, we still have our 14,895 shares, and our average price paid is $24.65 per share. And that's good for a not including dividends, $58,000 gain, and our value is $425,000. Our second largest position is VGT, and you can see we still have those same 500 shares we've had for a long time. Price paid is $246 per share. It's up about $176,000, and it's worth just a touch under $300,000. And then our money market is at $90,748. And on this one, I've actually been putting more into this high interest savings here because, believe it or not, E-Trade, which usually lags a little in the interest department for savings, increased it to 4.25. And VMFXX right now is 4.26. So they're basically the same at this point. I'm just stuffing money here because I have instant access to it without taking the day to sell my money market. So I'm gonna try to get this figure climbing before the big inevitable tax bill that's going to be due soon of about $22,000 for last year's Roth conversion. JEPQ is our fourth largest position here at 89,600. This is only mine, it does not include my wife's. An update on that, she submitted the form to E-Trade. We got it notarized and everything. So very soon, all of our JEPQ shares will be included here, mine and hers. For now, these are just mine and hers are in her separate recently opened E-Trade account. She has a Roth IRA there with about 14,000. We'll see everything in Seeking Alpha soon enough. For now, you just have to take my word on it. IBIT, we're still at our 1,050 shares, $36 per share average cost. You can see it's still up quite a bit, but man, Bitcoin has fallen a lot recently, and it's worth $50,295. And then everything from this S&P 500 fund and down is my nephew's. Now we're going to dive into each account. So in my taxable account, we have 9,877 shares of SCHD for $282,000. We have a big chunk of the money market and the IBIT. And that's just because we're only going to sell long-term capital gains and we plan on buying and holding this for a long time. But I don't consider it quite as legit as my other favorite holding, so I don't really want it in my Roth IRA long term. So I thought this was a good spot for it. Now coming out to the Roth IRA, it's where I hide all of my JEPQ to take advantage of those non-qualified ordinary dividends, at least 90+% of them are not qualified. So you can see that's all 1,601 of my shares. SCHD, so I have that in both, 708, quite a few shares out here, not nearly as many, but it's worth 20,200. And then VGT has 25 shares worth 15,000. So a little tidbit on my Roth. My wife and I for years and years focused exclusively on maxing our 401ks because at Boeing we had an amazing company match and an S&P 500 option. So we didn't have Roths for a long time. The majority of this is what I just converted over from my traditional IRA. And eventually this will have all of my retirement accounts before my wife retires. And speaking of the rollover IRA, you can see that most of the VGT is still here, has not been converted yet, for $284,000 worth and 475 shares. A nice little chunk of SCHD is out here, 4,310 shares at $123,000 of value, and then some money markets out here as well. Again, the plan here with this rollover IRA is to get the balance, which is at 411,000, down to zero in the next few years. Going to convert at least 100,000 a year, stay in the 22% tax bracket still, and get it over to the Roth. So the goal is to make this thing go poof in 4 or 5 years. And again, this is what everything adds up to, and this is the only one I typically share on this channel, but I figure I'd give you a little inside look. All right, now we're out here on Seeking Alpha, where I aggregate all of our investments that are located everywhere, and where I run all my screeners for the HODL Factory, the Snowball, and do all my stock and ETF research. Again, if you want to try it, link in the description below. This is pretty much all I use. But E-Trade here sorted, so you're going to see all the same things. We won't go over this one as per usual. Again, here is JEPQ with my wife's shares added. So we have a total of 1,846 shares instead of my 1,600. And you can see the values at $103,000. Everything else is the same. And this is the money market and the cash, the high yield savings added together, because I figure why have two lines here. So that's it for E-Trade. And then you come down to the 401k and the HSA. So we have all VU in the 401k, and that's almost 811 shares worth a whopping $443,000. So VU is our biggest holding, and we'll see that later in the spreadsheet. And then our HSA is VUG, and we have 92 shares at a value of $37,454. And a quick note on VUG, you're going to notice that there's no contributions last month when we get to that transaction section. And that is because we actually use our HSA to pay medical bills, whether it's for our kids or us. And I completely understand the triple tax advantage. Ultimately, technically, I get the triple tax advantage. Pre-tax contributions, and then pay those bills and never pay tax on anything, assuming that they qualify, which they all do. But we do that, gosh, that's probably a whole separate video. HSAs are very powerful, but they're technically a little overrated in some circumstances. And I would need a lot more time to explain that. But basically, it becomes a nerfed traditional IRA. You have to wait till a higher age and still pay all your taxes on non-medical stuff once you get to a certain age. And ultimately, Roth IRAs are the most powerful. And as I've already spilled the beans, I'm trying to move everything to a Roth. So when my wife retires, we'll move this. This should be worth over $1 million by then. It will be rolled over to a rollover IRA, a traditional IRA, and E-Trade for her. And then we'll do the Roth conversions, and we'll have no income, mind you. So we'll be able to fill up that whole 0, 10, 12, and then some of the 22% bracket every year, 300,000. And have a really low effective tax rate to get hers to a Roth. That's a long way of saying we use our HSA. We don't do the whole save receipts thing. I've made a video about it and it worked. There are a lot of crafty ways that you can use an HSA if you really want to get in the weeds, but we just use it as the thank you for the triple tax advantage. Okay, thanks, bye. And then we have our HODL Factory, and we'll dive more into the specific holdings at $18,800. And we have the new one, the Snowball, that I made to try to compete with SCHD over time at $3,163. And then our other cash equivalent, mostly high yield savings accounts and some other things, are at $48,000. You can see the total is $1,531,000. Which should magically match our portfolio tracking spreadsheet. You can see it fed right to here. I do these on the weekend, so they match up now. Put in my work on Saturday and Sunday when I make these videos. And you can see all these numbers should be the same, and they ultimately add up to that same total amount. So after plugging these in, everything else is pretty much automatically updated. We'll head on over to our target allocations tab. This is where I make my purchasing decisions. We have buy individual holding here. And I think from last month, I did separate out the Snowball stocks and the HODL stocks. That was a little confusing last month, and we'll get more into the allocations here. So you can see by individual position, we have a lot of VU, a lot of SCHD and VGT. That's my three-headed monster. And then cash is at 9.8%, which isn't too bad. And then we have JEPQ on down at lower percentages. And I'm kind of speeding through this because ultimately I jump over here to make decisions. We have our S&P 500, which we can't control because it's our 401k. It's ultimately going to run away over time because it's most of our contributions. But what we can control is growth compared to value. And I try to keep these the same. With the recent growth crash lately, value really made its way back into the game, which I kind of like, but it looks like SCHD is still my next purchase. And I will notice, and I mentioned this last month, SCHD is about 3,000 shy of our value. And that's because the Snowball stocks are very value oriented and they feed over to the value section. Whereas HODL has its own because it's a little bit of a hybrid, kind of more on the S&P 500 PE ratio track. But ultimately this is SCHD and the Snowball stocks. And then the growth section here, the 440, it consists of VGT, JEPQ, which I've explained my logic behind that, the underlying index and getting a little more conservative in the Roth and things like that. It feeds into the growth, whether you love it or hate it, and VUG. And then cash we like at 10% or so, between 5 and 10, usually closer to 10 historically, because I want money when the market crashes to be able to feather in. We're up almost around 10%, but we have a $22,000 tax bill coming from last year's Roth conversion. So this will be down and we'll need to work on replenishing it with some dividends. Bitcoin has really fallen lately, and this is IBIT technically for me, but I like it between 3 and 5%. So if it gets below 3%, that's a buy trigger for me. If it gets above 5%, that's a sell long-term capital gains and put it into the main mix trigger. And then the HODL Factory, I don't have a goal. It's just my YouTube money. It's $100 a week. So hopefully this thing keeps climbing if it keeps producing results. And this is a pivot chart that shows the portfolio value by month. And you can see in February here, our average value is 1.54 million. We are really close to January and a touch behind last December. So things have dropped a little bit for the portfolio, but overall, it has been a very strong market and there's no need to panic after a couple flat months.
This is just a projection. It takes our current value, it grabs it from the other tabs. These are all formulas. You put in your date of birth or today's date, and that'll show your age or amount of years. So in my case, I'm using years here. So I should label this differently, but that sounds like a lot of work. The growth percentage, I assume 8%, even though the historical average is 10%. This does not include inflation. So this is a 5% real return, 8 nominal. And our retirement goal is anything over 3 million. So you can see we're about 7 years away at an 8% growth pace with our current contributions, which are a 401k plus a stupidly juicy match, an HSA plus a match, nothing into E-Trade lately as far as monthly contributions. Fidelity, I moved to $50 per week of non-YouTube money. And then of course our M1 Finance is $100 a week, which ends up being $433 a month when you run the math on that. And when you add them all together, we do about $4,333 worth of contributions each and every month. So this just gives an idea. And forecasting's tough with this stuff because you just never know, and it never ends up being accurate. But I like how this updates real time. I'm not saying, oh, in 27 years, I'll have 18.12650 million, but these will just give you a ballpark number of where you're at. But as we know, anything can happen with these markets.
It's time to find out where all that cash landed. Portfolio contributions. We have a few automated investments that happen on a regular basis. We max my wife's 401k and HSA every year. This happens every other week when she gets paid. And I drop my juicy YouTube money, which is only about $100 a week, into the HODL Factory on M1 Finance. Everything else is done manually by yours truly. I have dividend reinvestment turned off because I like to stick to my target allocations in all markets. For example, if VGT pays a quarterly dividend after a huge tech ramp up, I probably don't want to buy more VGT at that point. I'd likely take the dividend and reinvest them into something like SCHD. That being said, here is what I did last month.
We had ourselves a pretty tame month, and we'll get into, 6,200 doesn't feel tame, but a lot of this is shuffling money, not necessarily new money. We can see here that the HODL Factory had 5 contributions, not shares, but just ignore that. Now it's the $100 per week for 400, and I actually got another referral bonus. So thank you to whoever is out there that signed up and met all the requirements to get me and yourself $75. That's really cool. So it ended up being $475 of contributions to the HODL Factory. This JEPQ was a monthly dividend that my wife and I both reinvested 1 share each in our Roth IRAs for, a total average cost here of $57.50. And then this SCHD was a reinvestment, I think, in my Roth IRA, Roth and traditional maybe, for $668. And that was good for 24 shares at an average cost of $27.83. So reinvestments and YouTube money so far. The new one, the Snowball, received 3 contributions. I dropped in 1,000, so I had just created it. It's only going to be, I think, $50 a week for a while, but I dropped in, I don't remember the exact increments. I have the data tab down here, but it was 1,000 and then 200 and then 50. So a lot of this was like a one-time drop coming from the money market. Again, not new money. And don't worry about the average cost. That's just, total dollar amount here. And then VOO was the 401k contribution. We got our normal 2 contributions, which is usually about 2.5 shares each. So that would be good for roughly 5 shares. And then my wife got a yearly, very small this year, like literally 10% of the normal bonus that also got just over a share. So it was a total of 3,700. It won't usually be this high. This did include a once a year incentive. So we did get $6,300 in, but again, that's a little deceptive because a lot of it's just reinvestments. But hey, you know what? I'll take it.
On to the part that ruffled my feathers last month. Dividends received. We fell short in the dividends department compared to last February, but we were so close. Let me show you how this tragedy unfolded.
Okay. We fell about $3 short of last February, and we're going to dive into that. But before we do that, I made a mistake last month. I undershot our January dividends. So I'm going to drop this down. If you watched last month, everything was accurate except for I forgot to add my high yield savings accounts. So between everything, I made $193 of interest, and I did include the money market, but I completely forgot my E-Trade savings, the M1 Finance one, and a few other ones I have out there when I diversify my cash. So when adding this $193.03, it got January up to an even more staggering $1,522. So I wanted to self-correct there. I was wrong last month, and it was an error in my favor. Sometimes it pays to be oblivious. And now you can see here in February, I already talked about it a little. Let's do the drop down. So I'm gonna call foul here. And again, we're gonna ignore 2023. I did treasury ladders and other things. So things were different back then as far as how I was getting interest. And I didn't do JEPQ yet, obviously. So this year we did better on JEPQ. We just have more shares at this point in time. Okay. Our M1 mix doubled. We like to see that. But then, okay, come on, old teeps. What were you doing, you cheater? Why was I sitting on that much cash? What was wrong with me? I call foul. Get him out of here. But this year we had $394 of money market dividends compared to $737 last year. Yeah, the interest was in the fives. It was like 5.3 at one point. But what was I doing? Party foul. But anyway, I'm just bitter. I guess I will say a big chunk of this is technically here, and we're a little less cash heavy right now. So I guess we'll take the L. We lost by $3. We're still happy. For the year so far, if we just look at January and February, we are at $2,820 of dividends compared to $2,286 of last year. So you know what? We're still winners.
It's time to dive into Snowball Analytics. Portfolio performance. This thing is incredible for breaking down the performance of a portfolio or multiple portfolios. Seriously, give it a try. It is completely free. And if you like what you see, you can pay for the premium version and you can support this poor guy. But at least give it a try.
We're out in Snowball Analytics for the second straight month to show pinpoint accurate results. Oh, this beats estimating everything in Portfolio Visualizer like I used to. I felt like I was lying, but I had no way to show the specifics. So this is great. For a little recap, right now I have Rip City Teeps pulled up, and this piles in everything. So you can see there's the total value. There's a few rounded shares and stuff, but it's basically the same as Seeking Alpha. Total profit, internal rate of return of 16.51. We've really crashed lately, but still okay. I'm gonna head over to the Analytics tab, and we're going to dive into the Dividend sub-tab here. So you can see that 2.58 yield. Our yield on cost is 3.37. That's good. It shows some good price appreciation for our overall portfolio. And then our dividends are down a little bit to $39,435 annually. I think the falling money market will really weigh into this. But what we're going to do now is I'm going to come up here on the top and I'm going to select invested only. So that what that does is it gets rid of cash, and now we can compare our investments to the competition. And wow, this is pretty wild. SCHD is smoking us this year, and VU is slightly ahead of us as well by nearly 1%. And we'll go down to the portfolio performance is where you really want to live here. So on the portfolio performance, I'm going to hit the compare button. It does this for SCHD. It's really weird. This is wrong, but it ends at the right spot. I don't know what the deal is. Snowball's been doing this, but I can say this is accurate, the end result. SCHD is up 4.45% on year to date. Our portfolio's up 0.53% and the market's up 1.36. So we are slightly trailing the S&P 500, and we're trailing SCHD by quite a bit. Now I scrolled down to the returns by month. I have 2025 selected. Here's the 2 months. And let's go ahead and add the compare to see how we're doing against VU and SCHD by month. And we're focusing on February, of course, because we already did January last month. So in February, our overall portfolio was down 1.3% to the market's 1.26. So the market just did get us in February. And you can see here that SCHD kicked butt at plus 2.55%. Uh-oh, haters, what's going on? I scrolled down to this holdings performance section. I've pulled just the February time range since that's what we're talking about. And I'm actually going to switch it to E-Trade only. And there we go. Now we can see for February how we performed. SCHD was the king at plus 2.6%. Oh man, I just saw IBIT down there. JEPQ slightly outperformed the market. They've battled back and forth in their lifetime. JEPQ is ahead since inception on total returns, believe it or not. So having it in a Roth IRA is pretty powerful because it doesn't drag on your returns with those ordinary dividends that it pays primarily. And then VIGIX, which I have as VUG, but this is the technical holding for the HSA, down 2.7, so rough for tech. VGT even worse at 2.9. So when you add these with SCHD, we almost beat the market. We were basically tied, as you saw up top. But then my IBIT didn't do me any favors. It was down 17% in February alone. So that one hurt us. Without IBIT, we would have slightly outperformed the market. Okay, now I've come out here and I've selected the HODL Factory. And we're gonna go over it real quick. I'll probably skip the snowball for a while just because it's so new it doesn't have much. But don't worry, I'm working on it in the background. And it is off to a rough start, by the way. I'm not just hiding it. SCHD is smoking us, but it's been getting a little better recently. But for the HODL Factory, since I've kept you guys in the loop for a long time on this one, we're at that 18.8K. We have an internal rate of return of just under 17%, so not too shabby. It has crashed a little bit lately, and we'll see that soon. And our dividend yield is 1.16% with a 25% dividend CAGR. In fact, let's just go to dividends to see this. Our yield is that 1.16. We have a 1.25% yield on cost. I always like to look at TPL as like an example of a yield on cost machine. Its yield on cost is 1.12%, even though its actual yield's only 0.45. That's that power of that growth I always try to explain with SCHD. It's like, technically, after 10 years, you get yourself a JEPQ dividend yield with something like SCHD if you just held it. But you can see we bring in $218.95 of annual dividends, and that's $18 a month. Doesn't seem like much, but we're growing at 25%. So our yield effectively doubles every 3 years on the money we're receiving. The rule of 72. 72 divided by 25 is about 3. So in 3 years, even if the yield still says 1.16, it will actually be 2.32, and then double that, and then double that every 3 years. So we like to see this high growth. And our dividend safety score is sky high on most of our companies here, as you can see, with our lowest ones being okay. So let's just look at February for now and hit compare. And you can see that the HODL Factory is down 3.3% to the market's 1.28, and SCHD being up the 2.54%. That's just February. If we look year to date, we're still losing 0.4% gains compared to 1.28 of the market and a whopping 4.37 for SCHD. I like to see it here just to see how things play out. You can see the HODL won the first month, but it got crushed as we just saw this last month here. So it was a rough February for sure. And let's just see some of the culprits for February. I'm gonna scroll down as much as I can. Okay, and woo-wee, we had some rough ones. Winmark is our biggest loser. Toll Brothers and SM, all about minus 13%. I started with those because we're gonna scroll up here, try to get as much in the screen as I can for you. Our holdings performance, TPL, Hess, and Devon. So some good energy plays here. And then Visa and MasterCard did a good job as well. And you can see there's a lot of holdings. I won't read them all off. I always like to look for Microsoft. There it is, minus 4.2. That's just one of my favorite core holdings over many, many years.
So far, we are solid average this year. Where are we going next? Final thoughts. I know I'm a broken record at this point, but I recommend staying the course with your contributions and strategies. Keep buying no matter what the market throws our way. Your future self will thank you. And really, I can't emphasize enough, if the market keeps dropping and having these crazy red days, continue DCAing your money into the market. If anything, ramp it up a little bit. But whether it goes up or whether it goes down, you built a quality system. You have to stick with it and save you from yourself. This is a simple game, and this simple man is here to help as much as possible. I believe in you, and you can do this. Block out all the noise that we have out there and keep grinding away at the positives. And while you're at it, check out one of these 2 videos if you want to continue down your path towards financial freedom. Remember, money is overrated, freedom is not. Thanks for watching, and I will see you here in the next one. Peace.